Happy Wednesday. This is Money Matters episode 5. We have got a number of topics we want to discuss today. First and foremost is the Fed decision that's likely out tomorrow. We've got further US-China trade discussions on the horizon. In terms of company announcements, numbers coming through from Novo Nordisk. We've got the Visa results. And our thought for the day is the European luxury sector. So let's begin with the macro. Tomorrow, the Fed meets. They're unlikely to be changing rates. We're likely to hear the Fed talk about the dangers and risks of tariffs still to come and the inflation pressures therein. We should be seeking to look for any kind of dovish narrative that would give us a signal for the direction of travel for when, not if, those rates are going to be coming down. This Friday, we're going to be seeing the unemployment numbers in the US, and I think that that will signal a significant signpost for what the Fed is going to be doing as far as interest rates. If unemployment is showing signs of loosening, we're likely to see the Fed become more dovish and reduce rates. In the meantime, Scott Bessent, the Treasury Secretary, has once again been meeting with his Chinese counterparts to discuss the tariff deal that they look to strike. It's pretty much the only outstanding large country apart from Mexico and Canada to still sign a deal. We believe that there will be a deal struck, and the market is looking quite optimistically at the potential outcome, and that implies that risk assets remain on the up. Turning to company matters, let's look at the results that have come out in the last 24 hours. We've had Novo Nordisk, the legend that was the insulin producer, changed the diabetics market, then became the new legend of the obesity market and launched Wegovy as the wonder drug to reduce obesity. Eli Lilly followed through with their Mounjaro. What has transpired is that Mounjaro has better efficacy and is coming through with lower side effects. That means that Wegovy has been losing out to Eli Lilly significantly in terms of revenues. They've guided lower in yesterday's announcement. And whilst the stock was flying high just 1 year ago, it's now some 70% down in terms of share price since then. They've replaced their CEO and announced a new CEO internally picked. This has disappointed the marketplace, who want to see an outsider who could come in and change things around. I think that this is a business that has a solution in the market that is not as good as its competitor. Its competitor is moving ahead at a much faster pace. Eli Lilly is due to release pill form as opposed to an injectable in the next year or so. In the meantime, Novo Nordisk is nowhere. And in terms of their various announcements of drug results, there hasn't been any good news either. So whilst the stock is significantly cheaper than Eli Lilly, it remains, I think, what is commonly referred to as a value trap, a cheap stock, but with no forward momentum. Avoid. The other stock that released numbers yesterday and is down some 3% so far before the market begins trading today is Visa. They're guiding well, and they're talking about a very resilient US consumer, both for discretionary goods, i.e. those kind of products that you don't necessarily have to buy, and for non-discretionary, i.e. groceries and other products that you have to buy. So the resiliency of the US consumer appears to be intact. That's good news for Visa. They saw 12% increase in their cross-border volumes and 14% in terms of their revenue growth, which is a pretty impressive. Visa also addressed the issue of stablecoins, and the CEO mentioned specifically that they account for the infrastructure, trusted network, connectivity, and already have provided some $25 billion worth of cross-border activity in terms of cryptocurrency, and will continue to increase the exposure to cryptocurrency as they go forward. Solid sailing for the stock. Let's turn now to our thought for the day and focus on the European luxury sector. This is a sector that in large terms is structural growth because it has a level of cyclicality through economic downturns, which is better than the general clothing market, which is highly competitive and very price sensitive. However, not all luxury is equal. The mass affluent product providers, the likes of Kering, the main brand of which is Gucci, which accounts for some 50% of their revenues, saw a decline of some 25% in revenues year on year in China. Compare that, however, to Hermes, which sits at top of the luxury ladder. This is a business with a customer base which really takes no notice or very little notice of economic cycles. They crave the leather good products in terms of Kenny bag and the Birkin bag that Hermes produces. And in terms of their results, they announced some 9% growth in their revenues. Leather goods was 15% higher. China, which is 40% of revenues, were up 5.2% compared to the Gucci numbers mentioned earlier. And Asia Pac remains a strong position for their overall revenue mix. If we step back and think about what Hermes is about, Hermes is a business that does not get affected by the imbalances in the economy, has very little impact from the economic cycles. Its customers are super rich and continue to crave those products Hermes makes. This inelastic demand for Hermes products means that there is a level of price consistency as well. The company addressed the tariff issues in that they will increase prices in accordance with the tariff format. That just simply means that if the tariff is going to be 15% higher, a 15% increase in a Birkin bag's price is not going to deter the customer. In terms of further earnings, the results from Meta and Microsoft aftermarket today, and Apple and Amazon aftermarket tomorrow. We'll address all of those in our Thursday podcast. In the meantime, in conclusion, the Fed keeps steady. Tiller, the US-China tariff deals will give us a risk-on environment for a little while yet to come. Novo Nordisk is underperforming. Visa remains unfazed and is a core structural growth company. Thank you for your time and enjoy the rest of it.